$2 trillion was just wiped out from the US stock market. Today, we cover why the market's falling, what to know, and where the action is at right now. Once you hear everything going on, you're going to realize that tomorrow can be even crazier.
Friday was insane as the trade war between the US and China has boiled over. So much so that Trump is actually putting 100% tariffs on top of the already existing tariffs in place on China. This wiped out $2 trillion from the stock market and $1.2 trillion in just 40 minutes. And what really kicked this off was Trump made a Truth Social post. And I gotta say, Mike, this is quite the hefty Truth Social post as well. We can see so much information within here. Trump is essentially accusing China of having a monopoly on rare earth materials. So basically, China is no longer just selling rare earth materials freely to anybody. They're slowly turning rare earths into like a strategic weapon that they can use. And of course, Trump is saying that this is kind of like a monopoly position. And I don't blame him, because China produces over 90% of the world's processed rare earths, and all countries essentially need these. So the US is hitting back. Trump says that we're putting 100% tariffs on Chinese imports starting on November 1st. And as we know, Mike, we're no strangers, and the stock market is not a stranger to these trade war situations. It actually extends back all the way to 2018, whenever Trump first kicked off the US and China trade war with the tariffs. And we can see quite the sell-off that ensued at the end of that year, and even this year in 2025. A lot of traders know that the market sold off very exponentially into April of this year. So we are seeing a lot of volatility, and of course, the market falling down 2.7% on Friday says a lot.
Big time. And like you pointed out, if there's like one thing that the stock market hates, it is US-China trade issues. And just like we saw from that China trade war V1 in 2018, the stock market sold off hard, and it sold off for multiple weeks and months at a time. And again, like we even saw something kind of similar this year with the Liberation Day crash. So it's safe to say that if these trade tensions continue to escalate, there is some serious risk in the stock market right now, and things can definitely get pretty bloody, especially considering that valuations are at all-time highs. One thing to keep in mind is that as we look at the, situation right now, Trump just slapped 100% tariffs on China. Clearly, China's not going to like that, and China actually warned of countermeasures if Trump doesn't walk back that 100% tariff threat. China said, we don't want a tariff war, but at the same time, we're not afraid of one either. And then Trump responded today in an optimistic way, which is good. He said, don't worry about China, it will be all fine. Highly respected President Xi just had a bad moment. He doesn't want a depression for his country, and neither do I. And he finished the post. So it's like, yes, this is like an optimistic statement from Trump, but I don't know, Tom. At the same time, this seems kind of like almost like he's antagonizing him a little bit. Like President Xi just had a bad moment.
It definitely does. It's almost like two brothers bickering or something like that, right? It's definitely a weird situation to see these two world leaders kind of clashing with each other. And I think that it's something that to definitely take to heart, especially whenever the market moves as much as it moved on Friday. That was quite the drop. We haven't seen a 2% drop in a while, let alone a 1% drop, and the market closed down 2.7%. Now, if we go to a daily chart, we can see that the SPY is essentially pretty far from its all-time highs now. I know that we've been making new all-time highs quite a bit, but I want to go back and look at some of these other crashes that have happened with the SPY specifically. Because if we do go back to that 2018 initial trade war, we can see that right away there was those first few days, right? Those were some pretty bad sell-offs. Now, keep in mind, specifically on October 10th is where we had the first really bad red day. Now, as we can tell, the very next day was again another bad sell-off, and then for the next couple of weeks we sold off even more. And I want you to keep this in mind for the next few trading days. This might not just be a situation that blows over. I know Trump made that nice optimistic post on Truth Social, but just keep in mind that the SPY could potentially keep selling down from here. So just keep that in mind. And as I look at the SPY a little bit like more in depth, Mike, I see some support levels coming up around 647 and specifically 650. I think these are going to be some very close levels in the short term. The SPY closed on Friday around 653. So if we end up getting to that 650 point and then falling below there and under 647 to 648, I think that things will start to look pretty rough. Now, of course, you can go back in history and look at the other trade wars. There have been some pretty nasty sell-offs, but when I look at the SPY, those are the two levels that are really in my mind over the next few trading days.
Definitely. And one thing to keep in mind is that if we look back at historical market data, we can see that in the past, whenever the stock market fell by 2.5% while making an all-time high the previous day, it generally is not the best signal in a short-term sense. Like when you zoom out 6 months later, 9 months later, a year later, it's all, sunshine and rainbows. But the short term can get pretty rough, especially 1 week and 2 weeks later. The stock market is only positive in that period of time around 50 to 38% of the time, which is not good, especially when you consider the stock market just rises, more than 50% of the time in general. Some other scary things to keep in mind is that in some of these past crashes, some of these pullbacks can get pretty nasty. For example, in 2020, we could see that there was like a 3 to 4% pullback. And then when you go back to other historical points, like you pointed out, these sell-offs can get pretty brutal.
They definitely have. Like whenever I look at the 2 week and 1 week later columns here, that is brutal to see that the market only goes green 50% and then 38% of the time. And that definitely gets me thinking like, okay, if the market is probably going to fall and if trade wars are escalating and this does pick up and the selling pressure does continue, how are we going to make money in the market as traders? That's probably everyone's biggest question. And the first thing that I think of is probably either puts on the market or looking at things like UVXY or some of these inversed ETFs like SQQQ, SPXS, etc. But looking at UVXY, it was up 19% on Friday. That is quite the jump, right? I know that the volatility index or the VIX jumped a lot too. We can see the VIX is actually starting to explode in the short term. Now, there are periods like in August of this year, at the very beginning of August, where the VIX will explode and slow down. Given that this is more of a trade war escalation, I'm getting worried, Mike, that we're going to start to see the VIX pop up like it did back in April whenever the trade war was going crazy. And if that happens, you can actually look at UVXY and go back to April and just look at how much it jumped up. From the low point just before that run up, UVXY ran up 175%. Now, I'm not saying that that has to happen again or that it has to go up that much, but you can take advantage of this situation and possibly look at, UVXY or SPXS or SQQQ in the ultra short term if you're somebody that doesn't just want to play puts or short the market. But these are definitely some opportunities to look at. And again, puts aren't off the table either.
Exactly. Yeah, there's multiple ways to capitalize off of it. And of course, in a broader, longer term sense, I wouldn't be surprised if this opened up longer term buy the dip style opportunities as well, with the main variable being how soon will the US and China, either come to a trade truce or make an agreement that both countries are happy with. This constant, trade war, higher tariff, and tensions just make it worse for both parties. And I think both leaders want to come to an agreement. We'll see what happens. In the meantime, in a trading sense, we have to trade what's on the charts, not what we want to see happen. So, let's keep a close eye, especially on the market. The more pressure puts on lows, the more people that will fearfully sell out, get margin called, and the more shorts that'll come in, only pushing the market lower. Tom, on top of that and all of the tariff stuff, the U.S. government is still shut down, and this shutdown is now forecasted to last more than 30 days, and the longest shutdown ever lasted 35 days back in 2019.
This is insane, right? We have everything boiling over with the US and China trade war situation. At the same time, the government is still shut down too. So we have to keep in mind now there's two things hitting the stock market, and who knows what's next, right? I'm just waiting for the next headline. But either way, Mike, this is going to be a pretty crazy week. And, while the government's shut down, Jerome Powell is actually set to speak this week. So on Tuesday, October 14th, he's set to give an economic outlook and monetary policy update at the National Association for Business Economics annual meeting in Philadelphia, Pennsylvania. At the same time, we're also going to be getting PPI data coming in on Thursday, along with retail sales and building permits and housing starts on Friday. So that's what the schedule is looking like this week. And we also can't forget that earnings season is kicking off again. Yes, the banks are starting to report. Let's get it.
Hell yeah. Yeah, so we have TSM before open on Thursday, ASML before open on Wednesday, and as these next couple of weeks go by, we'll have all the big tech stocks report as well, so there should be some, big moves and lots of trading opportunities, so that's always fun. But Tom, how about we get into the fun stuff for today, which are some setups and predictions, and a stock that is still on my bearish radar is ticker symbol IREN, and it is to the downside. I know we hit on this one a lot towards the end of last week, and this stock got crushed on Friday. It is still on my bearish radar heading into this week. It fell by around 6.5% on a close over close basis, but when you look at the high this stock hit on Friday, it was around $70 a share, and its low in after hours was all the way down to $50 a share. So we are seeing some brutal selling come in here. It's still overextended in a broader sense, and again, it is still on my bearish radar. There is a lot of support around that $57 to $55.50 area. If that floor gets taken out, then I think that'll be a pretty bad sign for this stock. At the same time, this stock is volatile, and while it fell a lot on Friday, if for whatever reason we do see it start to rally on Monday, there's no need to just blindly jump into a short with this one. We want to see pressure on those lows. The more pressure it puts, the better the opportunity becomes.
That's insane that from the high of the day to the low of the day, that stock fell down almost 30% if you count after hours there. That is quite the drop. I'll be watching IREN to the downside as well. But I'm actually watching another stock to the upside, and that is MP Materials. Yes, MP Materials is a rare earths company, essentially. This is pretty advantageous situation for them. They ran up 8.49% on Friday, and as we know, the main problem and the main thing driving the situation between the U.S. and China is, of course, rare earths, right? Whether you're talking about China and their new rare earths restrictions, or the U.S. getting angry and throwing 100% tariffs on them for what they're doing with their rare earths, nonetheless, it's a big deal. And MP Materials had a good pop on Friday because of this, running up 8.49%, and I'll be watching for a larger breakout to ensue. I like that high of day right around $85. It gives us a really clear resistance to watch. If we start to see MP break out past 85, watch for more upside momentum. I would not be surprised if this one had similar moves like it had on Friday with that 8% pop, and at the same time, this is a pretty volatile stock as well, with the average percent rise over the past year being 3.3%. It is quite the mover.
Definitely. Another stock that is close on watch is Palantir, and it's to the downside. I know some people really are not going to like to see this. Palantir, I love them for the long term, but in the shorter term sense, they have some huge resistance overhead, especially around that $190 level. The market itself is weakening. Palantir is one of the most aggressively valued stocks in the market, and it is having increasingly bearish momentum in the short term. I like the risk reward playing this one in a bearish sense. Right now, the stock is trading for around $175 per share. I think a stop loss can be reasonably set around that $185 point, with potential profit targets down to 150 and maybe even 138, depending on how bad this momentum gets. This is more of a multi-week setup where, again, like the rest of these bearish setups, the more urgent selling pressure we see, the better the opportunity becomes. Palantir is a beast, though. It has been one of the best performing stocks over the past few years. So, of course, this is a high risk, high reward setup.
Looking at it on the daily, that is quite the resistance that Palantir is rejecting at. And considering that the overall market is starting to drop with this trade war news, I would not be surprised if Palantir continued to show more downside momentum. So I will be watching it to the downside. But another stock I'm watching down is Tesla. Yeah, Tesla has been popping off recently. We can see in the short term, they've been really ripping, actually almost pushing new all-time highs here in the short term. But they, on Friday, actually fell down to a pretty key support level of $400 in after hours. And if we go to the Bookmap, we can see that $400 is a major buy wall. On Friday, there was around 100,000 shares right there at $400. So it's a big buy wall. There's a lot of buyers stacked there. If that ends up breaking to the downside, go ahead and watch Tesla down. I think it could be a good opportunity. I think Tesla got a little bit too overextended in the short term. There was a lot of hype with their Optimus robots, and, they did have some delivery numbers recently, and they didn't have the best stock reaction on those. So I will be watching them very closely. Again, it's a big psychological support, though. $400 will be critical. Make it break to the downside. If it does not break and the market starts bouncing back and Tesla starts rising, no reason to force this one.
All right, well, let's jump right into today's momentum plays then. And with the first one, we have Energy Fuels, ticker symbol UUUU to the upside.
Yeah, with all the trade war escalations, especially with rare earths, this uranium company went pretty crazy on Friday. If it can break out above 2237, then watch it up.
With the next one, we have Coinbase, ticker symbol COIN to the downside.
Gosh, it even spilled over into the crypto market. If Coinbase falls under the 335 support, then watch them to the downside.
And then we have Robinhood, ticker symbol HOOD, also to the downside.
A lot of people have been waiting for Robinhood to drop as it got pretty overextended, but they straddled that 132 support on Friday, so if 132 breaks, then watch them down as well.
All right, so we have these three stocks on the radar for potential continuations if and only if they break through the levels listed. These stocks are volatile, so whether you trade one of these three stocks or any other stock, prioritize making smart, long-term oriented trading decisions. Protect your capital above anything else, and if you need help with making long-term trading decisions, feel free to check out the Key Lessons channel of the StockedUp Discord. It is completely free. And besides that, Tom, let's jump right into today's $813,000 big money trade, and we are looking at ticker symbol XME. On Friday, the trader here bought the 97 strike put options that expire on November 21st of 2025. XME is an ETF that follows the metals and mining industry. And as we know, one of the biggest causes for Friday's sell-off was how China just tightened its export controls on rare earth metals. Basically, XME went from $45 up to $105 over this past year. It's pretty overextended, and it's starting to show signs of weakness right now. These put options are a little bit far out of the money, but nothing too crazy, especially considering these options have, around 40 days left until expiration. I think this is a super interesting trade. I like how it's showing bearish momentum in the short term. I like how overextended it is, and I also like the, short to medium term nature of this trade setup, where it's not like we have to wait, 5 months for it to play out.
Yeah, I think that makes this trade really fun as well. And, considering how much metals started to fall on Friday, this could be a pretty advantageous trade. Like if we go and we look at gold and silver at the end of last week, especially like Thursday and Friday, we started to see a lot more selling pressure hit those two metals. And as I look at XME, it did have quite the drop Friday, falling down 1.4%. So as I start to go forward and I just look at this play in general, I like that it's shorter time. The shorter time frame might make it more advantageous for us. Of course, if the market and, of course, the metals ETF here starts dropping a bit more, we could obviously see a bigger turnover, more sellers come in, and then, of course, the options would explode up even more because it's a shorter term play, right? There's not multiple months to it. But again, this could be a situation where this plays out pretty quickly. As we see XME, whenever it turns over, I like the way that it starts to trend to the downside. It's not like it generally will just turn over and then fall for a day or two and then go right back up. A lot of these downtrends that I'm seeing on XME last like multiple weeks at a time in a lot of cases.
Definitely. So let's keep it close on watch. It's definitely an interesting setup. And if you're new to the channel, welcome. We post brand new videos for every single trading day. It takes us multiple hours to make these videos where we cover everything you need to know in the stock market, whether it be this recent US and China trade tensions or earnings coming up, important events, government shutdown news, SPY levels and analysis, big money plays. We cover everything every single day. If you subscribe to us, you get our videos recommended to you more often. And we also want to give a giant shout out to today's member of the day, Keller, in the StockedUp Discord, who really crushed it on Friday. They had over $6,500 in gains and lots of SPY put profits as well. So huge shout out to you, Keller. Keep up the great work going forward. This week is definitely going to be a crazy one. Of course, all of the China trade issues, but Tom, we even have earnings season ramping back up again. Thank you all so much for watching, and let's crush it in the market this week.